So I've always been skeptical because, you put your own money in something, you don't want to lose it. So when I heard about the prefs, I was like, oh, these are perpetual, which means that this is a perpetual liability. When I looked at it on the surface, I was like, I don't like this at all. But then after putting a lot more thought into it, they don't ever have to refinance. Once they do that ATM, it's permanent equity. The other thing that changed my mind was in December, they raised $1.4 billion in cash, and then it became $2.25 billion in cash. And that shows on their balance sheet as 30 months of making dividend payments. I thought about it. I then did hundreds of hours of research. I watched lots of hours of Saylor. I'm on True North. And basically I said, this now makes sense to me. Last year, they raised a little bit over $23 billion. Do I think that they could raise another $23 billion this year? Sure. If the price of Bitcoin goes up, then I think the number could be higher. Am I bullish? Sure. I wouldn't be on this call if I wasn't bullish.
So, welcome to the Bitcoin Treasuries.net podcast. I'm Tyler Rowe, and today we've got somebody who needs no introduction, grain of salt, Mike from True North, Log Scale Investments. What's happening, Mike?
Just living the dream here out in San Francisco. I think we're all trying to get through whether this is a crypto winter or just a crypto storm, see how long it lasts. But no, it's been great. And I'm really happy to be on, talking to you about it. I believe that we've done 54 weekly podcasts over the past year. They tend to run about 2 hours. Even when the price is low, they tend to draw anywhere between 10 to 15,000 people on the phone call. The record is 125,000. And then what happened was last year at Strategy World, we decided to have an event, and we scheduled it, and Strategy was they were very helpful with it. So we had a space. We had 125 people that showed up. It was paid. They went to it. You also have to pay for a ticket to go to Strategy World. And it was people that wanted to meet us in person. And it's a much different interaction when you talk to somebody that way. Last year, it was recorded. I don't believe there was a webcast, but we posted a lot of the videos after the event. This year, we're not doing any videos. The mindset behind that was people may say something, I don't know, more insightful if they're not being recorded and blasted on the internet. So I think that was the idea behind it, to be a more comfortable setting, more intimate setting. So that's what we're doing. Everybody that's there is into Bitcoin and then Bitcoin for corporations.
I love it. I remember last year's event. I think it fell in, was it May?
It was in Orlando, yeah.
Yeah, in Orlando. And that was kind of right after I had picked up on your True North calls and started watching you guys every week. And I was like so surprised. There's people out there having the same conversations I'm having with my buddies at the gym. And I was like so excited to find you guys. And I wasn't able to make the event at last year's Strategy World. I had so much FOMO. So I think I was one of the first people to grab a ticket this year, Mike. But really looking forward to it. We're recording this on Tuesday, February 17th. Michael Saylor announced another Bitcoin buy of 2,400, 2,500 Bitcoin today. And one of the things I've been tracking is just how much that strategy has been able to accumulate, even though we're in a bear market. Something that's lining up for all of us is that Strategy's 100th Bitcoin buy could correspond with the start of Strategy World and the day you guys host the Inside event. So I hope we've got a lot to celebrate there. What do you think about how Saylor's been stacking, and what do you think he has in store?
Yeah, so a couple things. So on X, I go as grain of salt at Z06, Z07. It was a Corvette thing. I did not think it would be that difficult to use that as my handle. I'm trying to change to something else. So I wrote a couple articles about this. And the last article I wrote, can Strategy go to $4,000 a share? And you didn't ask for it. You asked specifically about them acquiring Bitcoin. The craziest thing is that, and a couple of people have asked this question, is that Strategy at the end of December 31st of 2023, so January 1st, 2024, they had less than 200,000 Bitcoins. So that's in 2 years. Well, now they have 714,000. Now, if you would have said to me at the end of January 1st, 2024, do you think they can acquire 500,000 Bitcoins in 2 years? I'd be like, no, I don't. And the reason why, and when people say, how is it, why would you say no? I think most of us think, well, the price of Bitcoin is going to be higher. And if the price is higher, then it's harder to acquire Bitcoin. But what happened was it traded at a higher MNAV. So that's this concept where Saylor says, oh, I can sell a $1 stock for $3, arbitrage at $2, and it goes into buying more Bitcoin. So what happened was in 2024, In 2025, it was massively accretive for the amount of Bitcoin that they have acquired per share. And the total Bitcoin went up by 500,000. I didn't think that was possible. So, to answer your question is that, with the 100th buy, I never thought when I got into strategy, I knew about it when they made this announcement. I'd never heard of Michael Saylor prior to August of 2020. Never heard of the company, never heard of him. But the simple answer, if you would have said to me in 5 years, they would acquire 714,000 Bitcoin, I would be like, how? How is that possible?
Absolutely incredible. And, I'm really looking forward to see what he continues to do this year. It's just been absolutely crazy.
And by the way, I want to add one more piece of color to that. If you would have said, hey, do you think they could acquire 700, from when they started, they would acquire almost 750,000 Bitcoin. At the same time, spot Bitcoin ETFs would get approved in January of 2024 also, I'd be like, no, I think that's going to be kind of hard to do because there's going to have multiple large buyers coming into the space. And I also thought the price would be a lot higher than it is now. So I didn't think that would be possible. I want to be very clear. Even though I've been following the company for now 5.5 years, I did not think that they would be able to add 500,000 Bitcoins in the past 2 years. That's the key takeaway.
Yeah, absolutely crazy. I'm looking forward to him deploying, $1 billion or something next week. Hopefully I'm not disappointed. Hopefully I haven't pumped the bags too much for all of our viewers, Mike. But one of the things last time you and I talked on our show over at Treasury Orange was how Saylor pivoted from, just issuing the common ATM and the convertible bonds to now he has all these products, Strife, Stretch, Stride, and Strike, the preferred equities. You told me that you at first had trouble with him doing that because he had hammered the convertible bonds and that made the price kind of go bananas when he'd lever up that way. But he changed your mind over time with the way that he was able to build out these preferred equities. Can you talk a little bit more now that there's been some months of him doing that, almost a year now since they've rolled out the preferred equities? How do you feel about it? And are you still bullish on the opportunity they present?
Sure. So I want to talk about a concept first. So whenever you hear a new idea, it's about any widget in the whole world, any concept. When anybody hears a new idea, and this goes back to my screen name, Grain of Salt, I always take things with a degree of skepticism. That's what grain of salt means. Take it with a grain of salt. If you know if it's true or not, you don't know. And so you have to put time and thought into it. So I've always been skeptical because, when you put your own money in something, you don't want to lose it. So that was my idea. So when I heard about the prefs, I was like, these are perpetual, which means that this is a perpetual liability, which means it basically goes to infinity. So when I looked at it on the surface, I was like, I don't like this at all because it pays out to infinity. So, but then after putting a lot more thought into it, basically they don't ever have to refinance. In terms of the refinance risk, they don't have to do it. Once they do that ATM, it's permanent equity. And then whatever the rate is that they pay out, 8 or 10% or 11.25% on STRC, that's all they have to pay out is on a yearly dividend. The other thing that changed my mind was in December, they raised $1.4 billion in cash, and then it became $2.25 billion in cash. And that shows on their balance sheet as 30 months of making dividend payments. So when you look at it that way, it's like, well, if there's a down market, they have 30 months of payments. Could they raise more cash because it only took them 2 ATMs to do that? Sure. So basically it took them 2 weeks to raise 30 months worth of dividend payments. Let's say they boost that to 48 or 60 months. It's like, how many months do you need in cash in order to do this? It's a rhetorical question before you're like, well, they're going to keep on paying it. So what changed my mind? What changed my mind was letting something sink into my head. I always take things skeptically. I thought about it. I then did hundreds of hours of research. I watched lots of hours of Saylor. I'm on True North, talked it all through. And basically I said, oh, this now makes sense to me. So once I did that, then I was like, I get now what the prefs are doing. And so STRC, and I've said this before publicly, I do think that's their iPhone moment. And I do think that that's an awesome product. I can explain why. But I think that to answer your question, it's that I did change my mind about it. I was skeptical. And I think that's what you should look for with other people. If somebody says, there's nothing you could say to change my mind, then do not, unless you are in agreement with them, don't argue with them. Just walk away. And so for me, as soon as somebody says to me, oh, I thought this way and I changed my mind, that way I know they're open to new, and that's the definition of being open-minded. They're willing to change their mind.
Cool. I love it. When we talked back, I think it was Q3 of last year, you were really bullish on the prefs, and you said that Saylor was going to be able to raise $50 billion. And I don't think I scoffed, but I thought that was a pretty rosy prediction. But you know what now? I think you were kind of bearish, Grain. Saylor's been able to raise, $10 billion plus dollars. I think they've got $14 billion.
Last year, they were the number one capital raiser out of all equities. They were number one at 8% of the market. Last year, they raised a little bit over $23 billion. So do I think that they could raise another $23 billion this year? Sure. If the price of Bitcoin goes up, then I think the number could be higher. And so I think that under-promising and over-delivering is good to do that. I think that the price was higher than it was now, but I do think that their guidance is to grow at Bitcoin per yield at 10%. I do think that they can continue growing this, no problem. And by the way, their 10%, right? Bitcoin yield is based upon the Bitcoin per share. But given that they hold 714,000 Bitcoins, let's just assume that they grow that at 10%. That's 70,000 Bitcoins per year. I think the number's higher. I think the number's closer to 20%, which is adding 150,000 Bitcoins per year. Now, per share just depends upon the price and so forth. But with that said, in the MNAV, so with this, I think that they are in a really unique spot in the space. And am I bullish? Sure. I wouldn't be on this call if I wasn't bullish.
No, that's good. A good framework and a good model to look at, Grain. I think if Bitcoin does the price start ripping again, I really think Strategy is going to be able to raise money like crazy, like they were in 2024 or the beginning of 2025. And, by the end of 2027, if we're in a bull market, we could see Strategy eclipse the 1 million Bitcoin mark. And that's just mind boggling for Michael Saylor to be able to own 1 million Bitcoin through his company, 5% of the outstanding supply. I think that at some point, it's just going to melt faces on the price of Bitcoin to the upside, right? Because Saylor's going to take so much Bitcoin off the market that there's not going to be any Bitcoin for anyone else to trade. What do you think about that? We hear people every cycle talk about moon math and Bitcoin's going to $500,000, Bitcoin's going to $1 million per coin. How long do you think it takes till we realistically get there?
I mean, that's the fundamental question. It's not if it's going to happen, it's just a matter of when. And so when we think about this, the amount of Bitcoin on exchanges, I believe, has dropped from about 2.5 million down to 1.5 million. I think that as that number continues to drop, the trading, whether it's in Strategy, trading, whether it's in IBIT and IBIT options, is more important than the perp market, the perpetual futures on just native Bitcoin, is because that market has greater pools of liquidity that comes into it. They're more sophisticated investors, hedge funds, asset managers. And so do I think that the price of Bitcoin is at some point, it'll be a step function. And when that happens, let's say Bitcoin's at 100,000 or 125 or 150,000, when it makes that jump and doubles in a short period of time, let's say it takes 3 to 6 months for that to happen, people will come out and be like, hey, I'm going to wait for this dip to happen. And we're in the dip right now and people aren't buying. Like we've seen this before. I've been through 2 major crypto winters. I've been through 2018 and well, I have to say I've been through I got in 2017, 2018 was a crypto winter. That was my first one. 2020 was miserable for everybody, COVID era. Then you had 2022 and 2023. That's your Terra Luna FTX crash. And then you get a bull run in 24 and 25 spot Bitcoin ETFs, MSTR runs up and so forth. And now you have whatever we're in right now. It's a crypto storm or a crypto winter. And so there's that. But we did have some big drawdowns last year. And so the same thing happens all the time. Somebody's going to come in after the price rips up. Like, well, I guess I got to wait for the dip. It's like, no, I'll just say to them now, no, you're not going to buy when it dips. You're just not. So going back to what you said, your question was about moon math. You're going to have a step function. It's going to happen within the next 2 years. It's going to jump up. And the only way that you can handle that is to be in it before it happens. Because when it starts going up, you're like, oh, I'm going to wait a day or two and hopefully it comes down. I'm going to wait a week or two and then it'll come down. It'll go up. And then you're going to be like, so let's say it doubles in price, Bitcoin, at some point in the future, right? It does it in 3 to 6 months. And then it comes back down, another 25 or 30% drop. It's not going to get you to where you were. And so I think it's going to catch people off guards. I think it does happen within the next 2 years. And I do think it's happening because the Bitcoin is coming off the exchanges. Strategy will get to 1 million Bitcoin in the next 2 years, especially if the prefs are if he's able to continue to do the prefs and raise money that way, then, and I think that you're going to see that it'll be highly accretive to MSTR shareholders with the way the shares work, that it'll be beneficial also to the Bitcoin price that way. That's my thought process.
Yeah, that's great stuff, Mike. And, every Bitcoin cycle, whether it's been traditionally 4-year cycles or whatever, it doesn't matter whether or not that continues. We know that Bitcoin's price is volatile. We're going to have another raging bull market before too long. And there's always something to look forward to. Last time it was the Bitcoin ETFs, and the Treasury companies kind of came at us like out of the blue. Everyone started copying the Saylor playbook. And the thing that I've been thinking about that's really going to drive the next bull market is that Wall Street's going to get their head out of their asses. Family offices are going to get their heads out of their asses. Sovereign wealth funds are going to get their heads out of their asses. And they're going to buy Stretch. They're going to buy the preferreds because I think it's easier for someone to grok and understand these preferred equities that Saylor's doing. And once they see his company survive through the ups and downs, they're going to be like, hey, I kind of want this 10 to 12% risk-free asset in my portfolio. And that'll just lead them, I think, further down the Bitcoin path. But I really see, I think there's going to be a waterfall of money flowing into the prefs. What do you think's holding that up right now, Grain?
I think it's the rating. I think the fact that the strategy has a B- rating on the company, there's no separate rating on the prefs. Look, the Ledin product, LEDN, did get a rating, triple B-, and which is investment grade. And that's a little bit different than what strategy does. They also have about 5% in cash. They have safeguards in place. They're 180%. Collateralized. And so my view is that strategy does not lend out their Bitcoin. So it does not need to be over collateralized from that aspect. And strategy has 4% in cash, and it's 30 months. And so from that perspective, I think that their typical triple B- bonds will have anywhere from, if they're low volatile, about 6 months in cash on hands to maybe 18 months on hands. I did some analysis on that. So my view is that strategy at 30 months of having cash on hand, if they were to bump that to 48 months for 4 years and they're holding it in cash, I would hope that the rating agencies take that into account. Part of the problem is that it's Bitcoin. But the fact that Ledin got a rating because they just liquidate people based upon when the value drops, let's say to 50%, and then they just liquidate the position so they get their money back. The money that they lent out, they get back because they liquidated that Bitcoin, and therefore the lender doesn't have to pay them back. I was like, but strategy doesn't loan out their Bitcoin. So my view is, what's holding it back? That's your question. It's they need to have a rating would be very helpful. I think STRC, just the fact that it pays monthly rather than quarterly, it's just the payment frequency. And the other part about STRC is that there's the target price between 99 and 101, and then there's a VWAP at the last week of every month. And so I think that for STRC, look, STRC, I believe, got launched in July. So, and then it has to hit its peg from when it went live and so forth. That took whatever, about 90 days. So now, even if the Bitcoin price dips and it gets back to the target range, 99 to 101, it's that they use the term seasoning in their presentation. And so people have to just become comfortable because the asset has been seasoned in the market, showing that it's able to withstand these dips. So I think that, the 1 year anniversary for Stretch, for STRC, if it's sometime in, it'll be whatever, July or August of this year, that's where more people feel comfortable. Well, it's been paying it for a year and they have almost 3 years of payments. People will flock to it just for that yield. And it's also return of capital. Like, why would you be in a CD? If a CD pays 3% or 4%, this is making almost triple, and it's non-taxable because it's return of capital. It's basically returning to either when you sell it, right? And so from that perspective,
man, once people find out about this, the masses find out about Stretch. I mean, like I said, it's going to be a waterfall of money, Mike, right? And that's good commentary that you think the credit rating is really going to bring it home. And people were critical. Some people critical of Saylor stacking a USD reserve, but he's listening to the marketplace, right? He's listening to how the credit rating agencies, rated MSTR common stock. And he's like, okay, fine. We're going to go out. We're going to hold some cash until you guys rate us appropriately. And I think it's just a matter of time. It's interesting you say he should get 48 months worth of cash. Michael, if you're listening, listen to Gray, he knows what he's talking about.
It's at some point, whether it's 36 or 48 months, there's diminishing returns that sets in. It's like, well, then people are just don't believe it at all. And it doesn't make any sense to go more than 36 or 48 months. I will tell you this, and this has been said publicly, is that Saylor was down in Miami and he said, he wants to have a bank basically take STRC and so-called like white label it. So if STRC pays 11%, the bank would take the product. They would say I'm just making this up. It'd be the JP Morgan high yield money market fund, and it pays out monthly. It pays out 8%. You're like, wait a second, 8%? No, it pays 11 and a quarter. No. They strip off the 3 and a quarter for themselves, right? And they get paid 3 and a quarter%, and then the people get 8%, and they're selling it as a JP Morgan product. So that's the value they bring to it. And if JP Morgan offers they offer STRC, you can say, well, you can just buy STRC, you can buy the JP Morgan one. People are like, well, I'll buy the JP Morgan one because I feel better about it. It wouldn't have a rating, but that's what he said that he's trying to, and I said, this is what you're trying to do. And I reposted it and he agreed with it. So it's not a surprise what he's trying to do. And that's where this waterfall money comes into it, is that sometimes you just have to package it in a better form.
Yep. Yeah, it makes a lot of sense. And, once people are comfortable buying the JP Morgan STRC that's collateralized with Stretch and maybe Treasuries, they're going to go down the rabbit hole. They're going to find out, some of them that, hey, what? There's this, I can get 12%, I can get 11.5%, whatever it is. And I'm excited to see that capital come in. What do you make of a lot of Bitcoiners who are maybe bearish on the Bitcoin Treasury trade because they've seen it underperform Bitcoin? But that's what you're getting into, right? When you buy a derivative of Bitcoin, is that you're going to see some of those amplified leveraged highs and some leveraged lows, and that's how things behave. What do you say to the Bitcoiners out there who are putting down the strategy that Michael Saylor is engaging in?
Well, I think there's a couple of different groups. And so I wrote a book on Bitcoin Treasury companies. It's called The Rise, Fall, and Reemergence of Bitcoin Treasury Companies. So I did this huge analysis. The book is available on Kindle, on Amazon. My real name is Mike Flaum. The Rise, Fall, and Reemergence of Bitcoin Treasury Companies. It's $9.99. So strategy is in a completely different realm than all the other Bitcoin Treasury companies. And I just don't want to refer to them for any other reason. There's There's one in particular that's doing incredibly well, that has their pref out. The pref is going towards their target. They have an unencumbered balance sheet, and they've completed the things that they said they would do. The other ones that are below that will remain nameless, but people can which I never bought any of the other ones. I bought a few of them, but not some of the more high profile ones. What I could say is that they did not understand the capital markets. In the capital markets, and this is where some of the Bitcoiners were right, in my view, in the capital markets, your responsibility is to the shareholders, not to acquiring the most amount of Bitcoin. It's, do I have the highest stock price, and is my market cap going up and stock price going up? Those are the two metrics for a publicly traded company. A lot of these companies thought, as long as we acquire Bitcoin as fast as possible, the stock price doesn't matter. Now, when they were high MNAVs and they went IPO, that worked out great. And then over the year, when the MNAVs collapsed, it was like, well, we acquired Bitcoin faster than anybody else, but our stock price is, 1/10 of where it used to be. It dropped 90%. So that was one of the biggest takeaways. In my book, I talk a lot of things about what they did wrong from a capital efficiency standpoint. But that's the difference between running a publicly traded Bitcoin treasury company and a Bitcoin ETF and buying spot Bitcoin. If you want to buy spot Bitcoin, you buy spot Bitcoin, you put it into a cold wallet. That's great. You know exactly what you have. You want to buy spot Bitcoin ETF, you can put that in an IRA wrapper in your brokerage account, and it's a little bit easier to use, and you have different tax treatment with it. Bitcoin treasury companies, the idea behind this was that each share of that Bitcoin treasury company would have a greater amount of Bitcoin in it over time. And that's great. But if you 5x the amount of Bitcoin per share, but the stock price drops 90%, in the end, your net gain was not good. So some of the things that people say is founded. What Saylor is doing is on a completely different level than everybody else. And so at that perspective, I would say is it's harder to do what Saylor does, given his head start of 5 years. And like we said earlier, coming up on their 100th acquisition of Bitcoin.
Yep. Great stuff, Mike. It's like, as always, you're investing out there, people. Do your own research. You've got to look into these companies. And like you said, there's companies that have great balance sheets. There's companies that do have the scale, like Strive, who are issuing, their preferred equity product with a pretty pristine, clean balance sheet after the similar acquisition. But do your own research. You're responsible for your investments. But at the end of the day, a business or a personal balance sheet fueled by Bitcoin is going to serve you pretty well if you're doing things capably and responsibly. Mike, thank you so much for the insight. We're going to see you Monday at the Inside event at Strategy World. Really excited. Let everyone know again where they can find you on Twitter and everywhere else.
Sure. So grain of salt at Z06, Z07. I got to change that part of the handle on X. That's the easiest way to find me. Mike Flaum. Also logscaleinvestments.com. There's my identity. I have some videos up there that I've recorded previously. And that's the easiest way to find me on X. Thank you, Tyler. I really appreciate it. I look forward to seeing you next week.
Yeah, absolutely. And as always, I have our guests say, stay orange.
Stay orange.